How's it going, traders? I hope you're all having a great weekend. I know I am, and welcome back to the Level-Headed Traders group. Now, like I said in the previous video, this is a makeup video for me missing Friday. I re-uploaded Friday's video yesterday, and this is the extra video that I'm kind of giving as my kind of apology for missing Friday's upload. So you're getting an extra video in the week, so how exciting is that? Now, in this lesson, like I said on the previous video, we're going to be diving deeper into the TD Ameritrade Thinkorswim platform. But what I mean by that realistically is not actual platform itself, but more technical analysis. Now that you guys have a basic understanding of what a stock is, how the stock market itself trades, as well as different brokerage platforms, I now want to start introducing you to more technical analysis and how to read charts. So no matter what platform you choose, it doesn't matter anything if you can't read the charts. So that's what we're going to start learning in this video. What we're going to go over in this video are the Japanese candlesticks and how to read them. What the Japanese candlesticks are the ways you will see price movements charted on stock graphs. The most common two forms of price movement charts are Japanese candlesticks or bar charts. We're not going to go over the bar graphs, but we will go over the Japanese candlesticks. So let's get into this. So like I do in most of my learning videos, I like to give you the actual kind of like book definition of Japanese candlesticks, and we'll go into further detail about it offhand. So what are Japanese candlesticks? Well, a Japanese candlestick is a candlestick type of a price chart that is used to display the high, the low, the open, and closing prices of a security for a specific period. Now, it originated from Japanese rice merchants and traders to track market prices in daily momentum of hundreds of years ago before becoming popularized in the United States and now used for charting price movements in stocks. Now, to sum that up in a whole sentence, Japanese candlesticks are a way for us to look at how the price moved from the opening time of trading to the closing. So say you're looking at a daily chart. So you're looking at from 9:30 a.m. Eastern Time to 4 p.m. Eastern Time. You want to plot how the price to move in a certain security for that day. So say you're looking at this candlestick right here. So you have a bullish candlestick, and say it's for Apple. So at 9:30 a.m. it opened up right here. Let's say that's $10. Apple opened. I know Apple's not trading at $10. It's about $200 right now. But just to keep it simple, easy to understand, let's just say 10. So Apple opens up at 9:30 a.m. trading at $10. The close up here is at 4 p.m. when the market closes. And let's say it got up all the way to $15. So this is $15. This is 10. So Apple started trading the day at 10, and yet it closed at 15. That's why this is a bullish candle. When you hear the word bullish, that means green or making money. That is a bullish sign of the market, so that's a good sign. Whenever you hear bullish, that's good. It means the price is moving up and people are making money. Now, let's say the market opened at 9:30 a.m. and Apple started at $10 again. However, at 4 p.m., it actually lowered to $5. So it lost $5 of value. The close would be down here. So you see how since Apple lost value, the body closes below its open. So you have 10 right here, and then you have 5. That's a bearish candle. Whenever you hear bearish in the market, bearish is bad. It normally means things have lost value. Now, depending on what position you have open, whether it's a long or a short position, a bearish candle can either be good or bad for you. If you're long, a bearish candle is bad for you. That means you want a stock to gain value, however, it has lost value. That goes against your interest. That is not good. But if you're short a position, bearish candles are kind of like your bullish candles. You want bearish candles because the more the stock loses value, the more money you make. So bearish candles, bullish candles are all dependent on your positioning. But let's just keep it simple here. Bullish candles are good. Bearish candles are bad. Now, how to read them. Like I said, this is the body of the candle. So the rectangle right here that is filled in, same with the bearish candle, the rectangle that is filled in, this whole part is called the body of the candle. What the body represents is simply where the security opened up at, so what price it started trading at for that time period, and where it closed for that time period. Now, based on the size of the body is going to depend on the size of the move of the price. So if it's a very small movement, you'll see a very small body. But if it's a large movement, you'll see a big body. And bearish candles are opposite. So they're bodies, but it's flipped, as we talked about before. So the open is going to be on the top, and the close is going to be on the bottom. Whereas bullish, open is on the bottom, close are on the top. Now, let's talk about these lines that are extending from it. The lines on the bullish candle and bearish candle are called wicks. So where it goes up here and where it goes down here. Same with here, goes down here, goes up here. What wicks show are the range of price movements. So simply, the stock, say this is a daily chart. So you're looking at, like we said, 9:30 a.m. open, 4 p.m. close. But what these wicks represent are the highs and the lows of the security price of that time. So say, like we said for a previous example, Apple opened up at $10 and it closed at 4 p.m. at 15. Well, what this wick represents is, say it got to a high during the middle of that day or sometime during that day, it got to a high of $20. It didn't close at that price. It came back down and closed at 15, but it got to that high. That's what wicks represent, are the highs and the lows of that trading time. So whatever time it is, the minute chart, the hourly chart, the daily chart, it shows the movement of the whole stock. So if you look at it from a viewpoint, this is the lowest the stock has ever gotten throughout that trading time, and this is the highest. This is where it opened, and this is where it closed. Same with the bearish. This is the highest the stock has got during that time. This is the lowest the stock has gone. This is where it opened. This is where it closed. Makes sense? Now, I want to go to the brokerage platform, and I want you to see it on an actual chart so we can walk it through, and it can help you understand the ranges of the different Japanese candlesticks. So let's go over to the brokerage account now. Okay, guys, we are now on the brokerage account, and like I said before, I wanted to show an actual Japanese candlestick chart so you can see exactly what it looks like on a real stock chart instead of the basic picture. Now, I removed all technical indicators off of the screen. There is nothing on here, so we can just purely focus on the actual Japanese candlesticks themselves. So as you can see, we have a mixture of bullish and bearish Japanese candlesticks in here. The bearish are easier to see. Right here, you can see we have hard bearish candles, and then we have a strong bullish candle resurgence that we've had. I mean, we've had a massive bullish market for this whole year. So that's why most of this is green. And then we obviously had our bad, very bad Q4 last year. But anyways, let's zoom in on some of these candlesticks just to kind of show you what it really looks like. So as you can see, right here is a very good example. We have a bullish candle, okay? So we had an opening price right here of the SPY at 285.62. And it closed up here at 288.14. But look at these wicks. You see how we have a long wick down here. That means the SPY's lows for the day, this is a daily chart, we're at 282.27. That means the stock price went all the way down to 282.27 and then fought its way back up to close all the way at 288, like 10, like whatever I said before. The close is 288.10. Yeah, the open is 285.62, and the close is 288.10. I can see that on the top left screen right here. It will show you the price. If you hover over the candlestick, it will show you the open and close. But also, look at the top wick. The top wick didn't have as much movement as the bottom. The top wick went to a high of about 288.90. So the stock price rose that high, but then it came back down. Now let's look at a bearish candle. This is a very pretty even bearish candle, actually. So we have an open right here at 282.49. The stock price closed down here at 280.90. So you can see we have a decrease in value in the stock. That's why it's a bearish candle. But the wicks, we reached a low of 279.98. And yet we reached a high of 283.44. So I hope you're starting to understand a little bit about how the Japanese candlesticks look and what they're meaning to tell you. The only thing that you should know about the Japanese candlesticks is they simply explain the movement of price. So whatever time frame you're looking at, it's going to be different from a daily to a minute. Whatever Japanese candlestick you are looking at, it will simply show you the change in price for that specific time. And now you might be wondering, what? I'm kind of confused, because if this means this closed right here at 288, how come the next day the open is all the way down here? That might confuse some people. Well, let me tell you something. This represents the daily moves in each trading day. But what this is not showing is the aftermarket moves. Now, there are normal market hours from 9:30 a.m. to 4 p.m. That's Eastern Standard Time. But there's also trading that happens after hours, so after those normal trading hours. That will cause the price to fluctuate a lot, and especially in the SPY, the S&P 500, it fluctuates all the time. So what will happen is you'll have a close right here, but say after market, like say at 8 o'clock at night when the market's not trading, there might be bad news come out. Like let's say Iran launches some missiles, or we have some kind of global problem, whether it's weak GDP numbers, whether it's any economic policy that goes against the growth of the market, it will bring the market down. So overnight, the market will change and move. So we might have a different open than we had at close. That's the reason why these are gaps. That's why we somehow gap from 288 all the way down to 282. And this is a pretty significant gap right here. So I'm kind of curious. I don't know what news happened here on May 13th. I don't remember, but this is a pretty significant gap down. So that's the reason for the gaps, as well as I hope you did get a good feeling of what Japanese candlesticks are. And also I hope you're feeling very confident about how to read them. I mean, like I said earlier, each cell body ranges. So you have a big body here. So you had a big open and then a big close. Then you have a much smaller one here. So a very small bearish day. You have an open right here and a close right here. So I hope you're finding a deeper understanding of how to read these charts. Now, that's going to be it for this video. I just wanted to give you a quick introduction to the Japanese candlesticks. And like I said in the previous video, we're going to keep on building on technical analysis. I wanted to start with the Japanese candlesticks because it doesn't matter how many technical indicators you add to your chart. It's not going to matter if you can't read the actual price chart and see what price movement itself is doing. So I hope this gave you a good base introduction. And then in the next videos, we're going to keep on adding on. We're going to go deeper into level 2. We're going to go deeper into orders. We're going to go deeper into different technical analysis like RSI, MACD, simple moving averages, exponential moving averages, as well as VWAP, so volume weighted average price. We're going to hit on those a lot heavier. And then hopefully after about, I want to say 10 to probably closer to 15 videos, we'll have a deeper understanding of technical analysis. And then we can actually transition into options as well, because I want to teach you guys options. And those are going to be a lot more complex, and those might be videos you have to watch multiple times. So if you did appreciate this video, please leave a like on it. I would greatly, greatly appreciate it, as well as subscribe for future content. The more information I can get, if you guys are enjoying these videos or any ways I can improve, that would help me out a lot, as well as join our Discord chat in the description. This is a place I want to create for like-minded individuals to get together, as well as talk about stocks. So if you want to join it, if you want to help out some other people, that would be greatly appreciated. But until next video, I hope everyone has happy trading.